Good afternoon. George Cavaligos for Naked Trader. Sell rallies, sell rallies, sell rallies, sell rallies. Worked again. Wasn't any outright bearish signals here, but the market opened up with a little bit of a bid, and around 8:15 Chicago time, the market all of a sudden had a big sell-off. A lot of calls coming in. Why are we going lower? Why are we going lower? No real reason. The market's been in a corrective phase. We went up on no news, and we went lower on no news. I think it's part of my theory that the electronic markets have cushioned moves to a certain extent, but we also see moves for unexplained reasons. Somebody had something to sell. That's the bottom line. Whether it was China, as some people rumored, or whatever. We'll find out the reason later. But I think we've seen a very powerful bearish move over the last 3 months. The market's been going sideways basically now, a little bit higher. We're we're less than 2 points off the recent lows at 118.5. The market's vulnerable, I think, and trading in the direction of the trend is still the best way to go. I think that you get these spiky sell-offs in the direction of the trend, and then you get the grind higher like we've seen since the early morning lows here as the market's working its way higher here. We had a small buyback this morning. It wasn't very large. $1.5 billion of tips were bought back. Tomorrow we do have a bigger buyback. I think going into tomorrow morning's buyback, I'll try to put another short on again. Trading it for half a point again, taking the quarter point, half point swings. I don't know if the market's ready to go yet. The market will tell us when that happens. The volume was pretty heavy. We did see some big selling going through, enough to keep me negative here. But again, you get this grind higher ever since we had the nasty little sell-off this morning. And we're only a half point lower in the bonds and 7.5, 8 ticks lower in the 10-year, whereas we were a lot lower this morning. Trading it, keep trading it, keep selling rallies, and I think we're going to get, another move to new lows here eventually. The market's basically gone sideways for the last couple weeks, sort of sideways to higher, I guess, depending on whether you're looking at the bonds or the 10-year. It looks very corrective. There's a lot of overlapping highs and lows. That's the kind of thing that we want to see in a corrective pattern. Once we start getting powerful sell-offs that don't correct a lot, that don't overlap, we'll know that the market's working its way into new lows. The 10-year did break some uptrends, some minor uptrends here. That uptrend line, it looks like it comes in right around 120.25. We're trading 120.20 right now. I think if the market grinds its way back up, there's probably some small stops above 120.25. I might want to sell into any kind of a stop run above 120.25 here. Look for kind of reversals on the hourly charts again. Candlesticks, you're looking for reversal patterns on the hourly chart to put some shorts on. That's the plan. Check the email, look for the support resistance levels. Keep selling rallies. We'll work our way into that fifth wave lower here eventually. We just don't know when that's going to start. I think we're getting closer though. Have a great night.